Attention seniors! The October 2025 CPP update is finally here, with new changes, important dates, and payment details you don't want to miss. Stay with me till the end to find out how this month's update could impact your benefits. The Canada Pension Plan, or CPP, is a cornerstone of retirement for millions of Canadians. It's not a gift from the government. It's a social insurance program that you, your employer, and self-employed individuals across the country pay into throughout your working years. Its purpose is simple but vital: to provide you with a predictable, partial replacement of your earnings once you retire. Think of it as a foundational piece of your retirement income puzzle, designed to work alongside your personal savings and other pensions. This plan is managed independently by CPP Investments, ensuring it remains sustainable for generations to come, including yours. Understanding how it works is the first step to taking control of your financial future. For those already receiving their CPP retirement pension, knowing when your payment will arrive is crucial for budgeting. In October 2025, you can expect your CPP payment to be deposited on Wednesday, October 29th, 2025. It's important to mark this date on your calendar. Looking ahead, the final two payments for the year are scheduled for November 26, 2025 and December 22, 2025. This early December payment helps ensure you have your funds before the holiday season gets into full swing. These dates are consistent for most recipients, providing a reliable schedule you can plan your monthly expenses around. Always check your bank account on these days to confirm the deposit has been made. Let's talk numbers. For 2025, the maximum monthly CPP retirement pension you can receive if you start at age 65 is $1,433. However, it is very important to understand that most people do not receive the maximum amount. The actual payment you get depends on how long you contributed and how much you earned. To give you a more realistic idea, the average monthly payment for new pensioners who started receiving their benefits at age 65 as of April 2025 was $844.53. This difference highlights why you can't rely solely on the maximum figure when planning your retirement budget. Your personal CPP statement from Service Canada will give you the most accurate estimate. Remember that your CPP payments are considered taxable income. This means you will have to pay income tax on the money you receive. To avoid a large tax bill at the end of the year or the need to pay in quarterly installments, you can make a simple request. Contact Service Canada and ask them to deduct federal income tax directly from your monthly CPP payments. You can specify a certain amount or a percentage to be withheld. This is a smart move that simplifies your finances and helps you manage your money more effectively throughout the year, preventing any unpleasant surprises when tax season arrives. So, who is eligible to receive a CPP retirement pension? The rules are quite straightforward. You can start receiving your pension as early as your 60th birthday. To qualify, you must have made at least one valid contribution to the Canada Pension Plan during your working life. That single contribution gets your foot in the door. Of course, the amount you receive is directly tied to your contribution history. The more years you contribute and the higher your earnings, up to the annual maximum, the larger your monthly pension will be when you decide to take it. It's a system that rewards consistent participation in the workforce. The timing of when you start your pension has a significant impact on your monthly payments. While you can begin at age 60, doing so means your payments will be permanently reduced. For every month you take it before your 65th birthday, your pension is lowered by 0.6%, adding up to a maximum reduction of 36% if you start right at age 60. On the other hand, if you can afford to wait, your patience will be rewarded. For each month you delay past age 65, your payment increases by 0.7%. If you wait until the latest possible start date, age 70, you will receive a pension that is 42% larger than it would have been at 65. You may have noticed that the amount deducted from your paycheck for CPP has been increasing. This isn't an accident. It's part of a planned enhancement to the Canada Pension Plan that started back in 2019. The increases in contribution rates are designed to boost the future retirement income for today's workers. The goal of this enhancement is to gradually increase the CPP's income replacement rate from 1/4 to 1/3 of a person's average work earnings. This proactive measure ensures that the CPP will provide a more substantial benefit for future retirees, helping them achieve greater financial security. The long-term health of the CPP is regularly monitored to ensure it can keep its promises to Canadians. Every 3 years, the Office of the Chief Actuary of Canada conducts a thorough review of the plan's finances. The next review is scheduled for 2025. These regular checkups are essential for maintaining public confidence and making any necessary adjustments to keep the plan on solid ground. So far, the projections are positive. The CPP is expected to be financially sustainable for at least the next 75 years, meaning it will be there for you when you need it. The Canada Pension Plan is not just a retirement plan. It also provides a safety net for contributors and their families in times of hardship. One of the most important of these is the CPP disability benefit. If you are under 65 and have a severe and prolonged disability that prevents you from working regularly, you may be eligible for this monthly payment. For 2025, the maximum disability benefit is $1,673.24 per month. This benefit is designed to provide income support when you are unable to earn a living due to a medical condition, offering crucial financial stability during a very difficult time. The CPP also provides support for families after a contributor passes away. The survivor's pension is paid to the legal spouse or common law partner of the deceased contributor. The amount varies based on the survivor's age and whether they are also receiving other CPP benefits. In 2025, a survivor under age 65 can receive up to $770.88 per month, while a survivor age 65 or older can receive up to $859.80. Furthermore, the CPP provides a children's benefit of $301.77 per month for the dependent children of a disabled or deceased contributor, helping to ease the financial burden on the family. What if you decide to keep working after you start receiving your CPP? The plan has a provision for that scenario called the Post-Retirement Benefit, or PRB. If you are under the age of 70 and continue to work and make CPP contributions while receiving your retirement pension, you will earn this additional benefit. The PRB is added to your monthly pension payments, increasing your retirement income. For 2025, the maximum post-retirement benefit you can earn is $49.39 per month. While it may seem like a small amount, it adds up over time and is a direct reward for your continued contributions to the plan. It's important to recognize that these associated benefits are a critical part of the overall CPP framework. They extend the plan's protection beyond the individual contributor to their immediate family. This creates a more comprehensive social safety net, acknowledging that life events like disability or death can have devastating financial consequences. When you contribute to this CPP, you are not just saving for your own retirement. You are also buying insurance that protects you and your loved ones against unforeseen circumstances. Understanding these benefits is key to knowing the full value of your contributions. In addition to the ongoing CPP updates, 2025 marks a significant step forward in federal support for persons with disabilities. A new program, the Canada Disability Benefit, or CDB, was launched in July 2025. This benefit is specifically designed to supplement the income of low-income, working-age adults with disabilities. To be eligible, you must be between the ages of 18 and 64 and have an approved disability tax credit certificate. The CDB is a direct payment aimed at reducing poverty and improving financial security for this vulnerable group. The next payment is scheduled for October 16, 2025. The Canada Disability Benefit provides a maximum monthly payment of $200. While this amount is intended as a supplement, it represents an important new layer of support. It is designed to work alongside existing federal and provincial disability programs, not replace them. For many, this extra income can make a meaningful difference in covering essential costs like food, housing, and medical expenses. The introduction of the CDB reflects a growing recognition that existing support systems are often not enough to lift people with disabilities out of poverty, and it aims to bridge that critical gap. When planning your finances, it's helpful to be aware of the full range of federal benefits available. October 2025 is a busy month for government payments beyond the CPP. These include the GST and HST credit on October 3rd, the Advanced Canada Workers Benefit on October 10th, and the Canada Child Benefit on October 20th. Additionally, the Old Age Security Pension, another key part of Canada's retirement income system, is paid on the same day as the CPP, October 29th. Knowing these dates helps you create a comprehensive monthly budget and manage your cash flow effectively. Ultimately, these updates to the CPP and the introduction of new benefits like the CDB have a clear purpose: to strengthen Canada's social safety net. For workers, the enhanced CPP means you are building a more robust pension for your future. For retirees, the reliable and increasing payments provide a stable income base. For individuals with disabilities and their families, the expanded benefits offer much-needed financial relief. By understanding these programs, contribution rules, and payment schedules, you are better equipped to plan for a secure and dignified retirement. Your financial future is in your hands, and this knowledge is power.